All right.
Hello,
So,
evening. My name is Uju.
okay, that's fine. That's fine. We can move now. For those who actually want to join on YouTube, you can join. I will send the link so that you can actually join. You're welcome once again to Next Gen Professional Associates, and I will be taking you 60% of the syllabus, I believe, at the end of this class, or at the end of the performance management class. You should be able to have an in-depth understanding of how it actually works. However, you should not be scared about performance management because it is very simple. All you need to know is for you to understand the principle, the basis that guides performance management, of which will be, as we move, we'll be talking about this basis. This introduction of this class is very important. All right. So quickly, before we start, let me quickly share my screen. Please confirm. Can you see my screen? Please
Yes, sir.
confirm. Okay, that's fine. Let me quickly share the icon syllabus, the new syllabus that we'll be working on. We'll be working with, actually. Performance management. Just a minute. Okay. So we have here management information covers about 10% of the syllabus. Advanced costing techniques covers 15% of the syllabus. Why decision making, as usual, covers 25% of the syllabus. We also have here budgeting and control, covers 20% of the syllabus. Performance measurements and control takes 15% of the syllabus. Performance evaluation and corporate failure. Corporate failure usually, it is usually in a strategic financial management, but now at skills level, PM, performance management, and corporate failure, which takes 10% of the syllabus. So we have here emerging issues in performance management that takes 5% of the syllabus. In all this, we'll be looking at the syllabus one after the other. I may not actually arrange it the way it is, right? I'm sure when the other lecturer comes tomorrow for the class, he will be able to explain better. However, in today's class, we'll be looking at the introduction to performance management. So I'm very sure you are with your writing material. Please stay away from any distraction and focus. Before I start the definition of terms, what we want to do in performance management, it is all about decision making. Let me say it again. It is all about what? Decision making. Maybe a management accountant or a cost accountant. You need to present a report to the management for them to make decision. Everything what we are going to discuss in performance management will be all about decision making. Now, the definition of terms here you need to know is the definition of cost. As we all know that cost is the amount of resources used up or the amount you spend or expended in making goods and services. When you want to produce a commodity, of course, you will incur a cost. When you want to produce, let's say, for instance, you want to produce laptop, you will definitely incur the cost. That cost that you incur, it is what we call, it is costs that are used in making what the goods and services. Now, having explained the cost, we need to move to the cost unit. The question is, what is cost unit, class? Cost unit is a unit of a product or a service in relation to which cost can be ascertained. Now, let's leave all this English. When they say cost unit, if you buy 1 carton of Indomie at the total cost of 50 naira or at the total cost of 100 naira, what is the numbers? What is the numbers of Indomie can you find in the carton? Let's say you purchase the Indomie at the total cost of 100 naira. The numbers of Indomie that you can find, let's say you can find about 5, right? Now, what will be the cost per unit? It will be the total cost that you use in buying that Indomie divided by the numbers that you can find inside that Indomie. That will give you the cost price. It's just like you have the total cost of the super pack to be 200, and in super pack you can see about maybe 50 to 100. For you to get the unit cost, it will be 200 divided by 100, right? 100 quantity. What you can see, it will give you the unit cost per one. And that is why they said it is a unit of a product. Having explained the cost unit, we need to move to cost classification. What is cost classification? It's the process of grouping a cost according to how they occur for decision making. Class. Cost classification can be grouped in different categories. Under the cost classification, we could have classification by elements, classification by nature, classification by function, as well as classification by control. Now let's quickly pick this one after the other. Classification by element means that you are classifying cost according to a specific element, right? Maybe the material, the labor, and the overhead. Of course, when you want to produce a commodity, you need to buy material. When you buy your material, of course, you cannot do it alone. You will need labor, right? When you need labor that are unavoidable costs, you now move to overhead. The question is, what is the overhead cost? Overhead costs are costs that cannot be avoidable. You buy material, you tell Mr. A to come and assist you to convert it to finished product. Overhead costs include rent. Of course, you will pay rent. The machine you use, you will pay for the machine, right? You cannot do without them. Why? Because without a space, without rent, or without an office space, you cannot actually produce. Even if you can produce, what about the machine that you will use in the production? They are all overhead costs. Of course, you can actually avoid it. You can only avoid it if you don't want to continue operation. We'll explain more as we move. So these are the classification of costs by the element, by the material you used, by the numbers of labor, as well as the overhead costs. Now, classification by nature. The classification of by nature could be divided into the direct and indirect costs. How costs can be identified with specific cost units. Class, when they say cost class, when they say cost unit, it means that the unit of a product, right? it means units per one, right? The total cost of super pack could be maybe 200 naira. What is the numbers of Indomie can you find in the super pack? Let's say 100. 200 naira divided by the 100 will give you what? The unit cost per Indomie, right? Now you could not classification by nature. Either you want to classify cost as a direct cost or indirect cost. The question now is, what is direct cost? Now, class, direct costs are costs that are directable, that direct costs are costs that you incur directly into a production. Any cost you incur, right, in the process of producing that commodity, it is called a direct cost. It is called, you can actually avoid it, right? It is called a direct what? Direct cost. Let's say, for instance, if you want to produce bread, you will need some material flour, you will need labor, right? Direct material, direct labor, direct expenses are called direct costs. They are all direct because you use all these things directly in what? In a production. You use it, what you can use directly in the production, it is called a direct cost. Material, of course, labor, of course, and other direct expenses that you could use in producing that product, and that is what is called what? A direct cost. Now, you could classify cost as an indirect cost. The question now is, what is indirect cost? Indirect costs are costs that cannot be traceable into a particular production unit. Now, let's forget about the English. Indirect cost means that the cost that you did not incur directly into a production, it does not form part of your process in part of the cost incurred in producing that particular product, in converting that particular product to a finished goods. Let's say, for instance, your rent that you paid, right? Do you actually use the rent in producing a product? No, but it is like a service at the back end for you to be able to produce it. But you didn't use the rent directly in the production. What you use is the material that you use in producing that particular product. Another example is your plant and machinery, right? It's your plant and what? Machinery. The equipment that you actually use, right? It's part of your what? Indirect cost. However, the electricity bill, right, could be actually classified as an indirect cost. But however, electricity bill could be classified on the long run, could be classified as a direct cost. We'll look at all these terms as we actually move on. Now, classification by function. A cost could be classified according to the what? To the function, right? Such as production costs and non-production costs, right? We'll get there. Then classification by control, classification by behavior. Classification by behavior means that you can classify costs according to how it actually behaves, how the cost actually change, right? That is classification by behavior. It's based on the response of cost changes. Don't forget that the costs of production changes directly with what? With your output, class. Your cost can only change based on what is actually happening in your production. Let's say, for instance, if the cost that you will incur, if you want to produce 50,000 units, the cost that you will incur in producing 50,000 units will be different from when you want to produce 200 units. You can see that how costs behave according to the changes in your output. See, please don't be deceived by level of activity. Level of activity, unit produce, output. We are still speaking the same English, right? So you could see how cost behave according to the what your changes in what according to what you produce. If you are producing 50,000 units, the cost you will incur in producing that 50,000 units will be different from when you are producing 200,000 units. And that is why we said cost changes according to the levels of what activity. Now, having explained the cost, we've defined the cost unit, the cost classification, right? Then the cost behavior. And don't forget, I've equally explained it, that is the way costs respond to changes in level of activities, right? Now, the level of activity could be unit produced, could be labor hours, right? Could be what? Passenger per bus. It depends, right? So costs behave according to your level of activities, according to what you produce. I've explained this earlier. Now, cost behavior and range. How does it behave? Now, we need to now discuss what we call variable cost, fixed cost, as well as what? Mixed cost. Before I move on, I need to confirm if we are following. Class, are we still together?
Yes,
still together?
Yes, sir.
Okay,
Yes,
that's
we
fine.
are.
That's fine. So what leads us to variable cost is how the costs behave. It behaves according to the levels of activity, changes in the levels of activities. And what are these costs? They are called, we have the variable cost, the fixed cost, and the mixed cost. The question now is, what is variable cost? Variable cost is a cost that varies according to the level of activity. Class, variable costs. Variable costs, we have variable cost per unit. Please, let's get this. If you understand these terms, I believe you will not have challenges in performance management. There are two different things here. There is variable cost per unit and total variable costs. Class, there is variable cost per unit and there is total variable costs. Your total variable cost varies with what you produce, right? You can agree with me that when you want to produce 50,000 units, example of a variable cost is material and labor. If you want to produce 50,000 units, you buy material worth 50 naira to produce 50,000 units. Now, when you now want to produce 60,000 units, definitely, your total variable cost will change because your level of activities have actually changes. Can you see? So, which means that the 60,000 units times your variable cost, which is the material, will give you what? The total variable cost. It changes based on if your level of activities changes, if your unit produce keep changing, right? Definitely, your total variable cost will also change. Now, why the variable cost per unit will remain constant? Will remain what? Constant as per the level of activity increases. Your variable cost per unit, the cost you incur per unit will remain the same. It is what will only change is the total variable cost. The total variable cost will change according to what you are producing. Now, for instance, if material, you will use 50 kg to produce 50,000 units. Is that not so? Now, you now increase it to produce 60,000 units, right? And still, the cost per unit maybe is 5 naira per unit. Now, if you multiply it, it will give you your total variable cost. You will see that as your level of activities increases, your variable cost per unit will remain constant. And when your variable cost per unit remain constant, your total variable cost will varies, because the total variable cost varies with what you are producing, right? If you produce 60,000 units, the total variable cost may be 10 naira. When you produce 100,000 units, the total variable cost will increase to 100 naira, because it varies with what you are producing. Why the variable cost per unit remain constant. Characteristics of variable cost. Now, total variable cost increases as the levels of what activities changes. Variable cost per unit remain constant, and that is what I'm trying to what I'm actually trying to establish, that your variable cost per unit remain constant irrespective of your level of what activity. So we'll see how it actually what remain constant. Then now we move to fixed cost. Fixed cost is also known as what? Period cost. Fixed cost, total fixed costs are not expected to change. Your fixed cost will remain fixed, class, within the levels of, even if your production increases, your fixed cost, your total fixed cost, right, will remain what? Will remain constant, will remain the same. An example of fixed cost is salary. For those who work in the manufacturing sector, you could see that even if you are producing from 10,000 units to 50,000 units, they will still tell you that, okay, your salary still remain 20,000 naira. It does not change. That is salary. Now, even if that is established, right, your rent that you paid for that space for manufacturing, right, it remains constant. But however, your rent could vary on the long run, but we will get there. That's one will take us to what we call what is it called? It will take us to what we call step-up cost. We'll get there. Class, are we still together? Who is against me in this class? I need to know. Do you have anyone that is against me? If you're against me, let me know. So we move. The fixed cost, total fixed cost will remain unchanged. It does not vary. However, sometimes your fixed cost may actually vary, right? That will take us to what we call step-up cost. We'll get there. But in actual sense is that your total fixed cost, why I said sometimes your total fixed cost may vary, is because you rent an apartment to produce 50 for production. Then maybe you are producing 50,000 units. Then because of changes in the market, your production now increase to 2,000 units. Now definitely you will not be using that space again, because you need to expand. So you can see that as a result of the expansion, as a result of the increase in your output, that rent will actually increases. But that is what we call step-up cost. We'll get there. I'm just explaining. We'll get to that point. But your total fixed cost remain unchanged, right? Your total fixed cost remain what? Remain unchanged. Now, total fixed cost remain unchanged, while the fixed cost per unit varies. Class, don't forget, your variable cost, total variable cost per unit varies. Variable cost per unit is constant. Total fixed cost is actually remain constant irrespective of your level of activity, your level of output, your numbers of hours, your unit produced, your anything. Why? The cost per unit, right? The fixed cost per unit remain what? Remain constant, right? Varies, sorry. Now, fixed cost is actually divided into two. Class, please understand this cost behavior. understand this cost concept. We defined the cost unit, the cost classification, cost behavior, takes also variable cost. The total variable cost varies with the level of output. Your variable cost per unit is constant. Your fixed cost does not change, right? Does not what? Your total. If they say something is total cost, total fixed cost, it is not per one, it is total. Now, why the fixed cost per unit varies? Fixed cost can be divided into two, right? We have the discretionary fixed cost, then committed fixed cost. The question now is, what is discretionary fixed cost or programmed fixed cost? These are costs that this cost is being incurred or decided upon by the management at the beginning of what? Of a project, of a budget period of time. Plus, it can only be adjusted by the management. This cost, we all know this, that at the beginning of accounting year, maybe January, we have a budget. We said by the management, we say, okay, we want to incur research costs. We want to increase our research, right? We'll incur 20,000. We'll incur advertisement, 10,000. These are costs that being programmed by the management. It can be adjusted at management discretion at the beginning of the financial year, at the beginning of January, right? The management can say that this is what they want to incur on this particular cost, and that is what we call discretionary fixed cost. Why committed cost? At the same time, the salary that they paid and the rent that they paid, it is called committed fixed cost. Because why is it committed? Imagine a new company now. Now, a new company in January will be saying that, oh, I need to pay salary in February. Oh, I need to pay rent at the end of December. That is committed. You've already committed yourself that you will pay this, right? You will pay this. That is what we call committed costs, right? At the earlier, you've already committed that you will pay this. Just like when you receive your salary, you say, oh, you will give this person 20,000 naira. It is committed cost. It is committed fixed cost. Now, I want to explain that committed cost is also divided into three. Ahmed, mute your mic. Committed cost is divided into three. Standby costs, right? Enabling costs and stepped fixed costs. This is where we are going to, right? Committed cost is divided into three. Standby cost, enabling cost, and stepped fixed cost. What is standby cost? These are costs which are related to investment in the organization that cannot be avoided by a temporary shutdown. You cannot avoid this. If the organization temporarily, they don't want to discontinue the operation, but they just want to shut down for a short period of time, there are some costs that, whether you like it or not, it will be there. If you have machine, if they have machine, plant and machinery, of course, you will charge depreciation. See, whether you are in that operation or you are not in that operation, depreciation will take place. Admin salaries, those who will be there for a short period because it is temporary shutdown, right? You will pay them, as well as insurance and so on and so forth. Now, If it is standby cost, you cannot, if there is a temporary shutdown of an organization, of course, some guys or some workers will still be going to work. You will pay them. You cannot avoid it. That is what we call committed standby cost. Now, enabling cost. These costs that can be avoided by a temporary shutdown, but must be incurred if operation are to take place, such as salary, right? Enabling cost. Can you see it? The standby cost is talking about when there is a temporary shutdown. You cannot avoid it because there are some people that will still, workers that will still be going to work. While enabling cost, you can actually, that can be avoided, right? Enabling costs are costs that can actually be avoided even if there is what temporary shutdown. For instance, excuse me, salaries of non-key personnel staff. Those people who are not, you know, they are not key personnel staff. You know, when a company wants to shut down temporarily, they will actually lay off some staffs. You can go, you stay, you know, the committed cost, those guys that will remain, right? That is standby cost, right? Now, those people who actually left because they are non-key personnel staff, these costs are called enabling costs. They are all fixed costs, but they are enabling costs. You know, don't forget, we are trying to classify our group fixed costs into what different sections, right? Now, another thing is stepped fixed cost. What is stepped fixed cost? You will see this as we move on. These are costs which remain fixed for a relevant range of activity, but if this range is existed, the cost will increase by fixed amount. Let's leave all this English. Stepped fixed cost. Stepped fixed cost means that if, for instance, right, practically, you rented an apartment, class, please, let's pay attention to stepped fixed cost. Let's say, for instance, you rented an apartment and you say, okay, this apartment, you will use it, a building, for instance, and you say, okay, you will use it to be producing, maybe at least it will contain a start, maybe 20,000 kg. Let's say 20,000 kg or 20,000 units a start, right? Now, suddenly, right? Suddenly, because of the demand in that particular product, then the production, the sales increases. Then you needed to meet up with the sales, with the customers, with the customer, right? Now, what will you do? You will decide that, okay, we need to increase our production. Now, and that space that you are using, that rent space, it will not be enough for you to produce 50,000 kg or 50,000 units, right? It means that you need to expand. Now, when you decide to expand, right, the additional cost you incurred as a result of increase in that your level of activity, it is what we call stepped fixed costs, right? Your supervisor cost will actually increase. Someone who is just supervising those people who are producing 20,000 units, and now you now increase it to 1,000 units. Chef Pani, do you want to kill the person? The cost of supervision will increase. Is that not so? We actually what increase. With that, the cost you incur as a result of that, the additional costs, right? You incur as a result of that, it is what we call stepped fixed cost. Please, you need to understand. I've explained the variable cost, the concept of fixed cost, then we move to the mixed cost. The question now is, what is mixed cost? Mixed cost is also known as semi-variable cost, or semi-fixed cost. When they say something is mixed, let's forget about the English, the definition. Mixed means that is the combination of both costs and variable costs. So there are some costs that include both fixed costs and variable costs. Of course, electricity, I've mentioned it. Even if your electricity is fixed, let's say for instance, practically, you have manufacturing, you are actually operating in the manufacturing sector. Now you are producing, you are using a unit of, let's say, 120 to produce 50,000. That is the unit you are using. That is the electricity cost. Now to produce 50,000, distinguished professional colleagues, once that production increased to 10,000, definitely that unit will change as a result of the increase in your what? In your production. Now, with that, the electricity include the mixed costs, which is the fixed cost, as well as what? Variable cost. And that is why we say there is mixed cost. You need to separate your mixed cost. You need to separate your fixed costs. In this case, you need to separate your fixed cost from your what? From your variable cost. And this will take us to what we call cost estimation. Now, class, are we still together?
Yes, sir.
Yes, sir.
Okay. Okay, that's fine. So we move, right? Don't worry. Performance management is not difficult, right? All right. So the question is, because these cost elements include both fixed costs and variable costs, right? How do we now separate this? So this will take us to where? Cost estimation. In cost estimation, that is why we now use different techniques of separating the fixed cost from our variable costs. But before we talk about the cost estimation, I need to explain the meaning of cost estimation. So I need to explain the meaning of cost estimation. The question is, what is cost estimation? Basically, is when the management or when an organization make use of the historical costs to predict the future costs for management decision making. Don't forget, performance management, it is all about decision making. As a cost accountant or as a management accountant class, the cost estimation is how the management or how the cost accountants use the historical data to predict the future cost for the management to make decision. Let's say, for instance, if you incur the cost of labor in 2020 or in 2020, in 2023 or 2024, because of the labor was 10,000, you can use that to predict the future that, oh, if the cost of labor as at 2024 is 50,000 naira, definitely in 2025 it may be 100,000. So who are these guys? Those guys help the management, you know, using the historical data. They break down the cost, right, by analyzing the fixed costs and variable costs. Class, That is what we call cost estimation. They estimate what will be the future fixed cost and what will be the future variable cost. The question is, for estimation to be possible, we must be able to identify the various types of cost involved and where a mixed cost arises. It must be analyzed or broken down into fixed and variable costs for you to actually estimate the future cost. In estimating the future cost, as a management accountant or as a cost accountant, should be able to classify that your future prediction into a fixed and variable cost. Don't forget, when you add a cost that include both fixed costs and variable costs, it is called a mixed cost, right? So therefore, we need to separate this. We need to separate the element of a fixed cost as well as what? The element of a variable cost. In doing this, there are different cost estimation techniques. One, engineering method, accounting analysis method, scatter diagram, high and low method, regression analysis. Our focus will be on high and low method as well as the regression analysis technique. The accounting analysis method, there is actually subjective because you will be the one to classify your cost to be as a fixed cost or as a variable cost. Your cost that you classify as fixed cost, another person may tell you that no, this cost will vary on the long run. Just like when you have electricity, right? So you look at it that in a short run, oh, electricity is actually fixed, but on the long run, when your production increases, electricity bill can actually what increases, right? So it is based on your own discretion that you will need to classify your fixed cost and variable cost using the accounting analysis method. It's actually subjective. The scatter diagram approach, then the high and low method. Our focus will be on high and low method as well as a regression analysis. Distinguished professional colleague, high and low method. In high and low method, we'll discuss what is the high and low method. What leads us to high and low method is the cost estimation techniques. What is the cost estimation techniques? Is the cost estimation. Cost estimation is when you use the historical data to predict the future cost. By separating, when you are predicting future costs, you need to separate your fixed cost from your variable cost. Then which techniques are you going to use? There are 5 techniques, right? But for the purpose of this class, we're using 2 techniques, which are the high and low method as well as what? The regression analysis, for you to separate your fixed cost from your what? From your variable costs. Class, are we still together? Are we still together?
Yes, sir.
Yes, sir.
Okay. Okay. Now, high and low method, right? Now, in this high and low method, it is very important for you to understand this because high and low method, when we get to flexible budgets, you will make use of it. You can't even run away from costs, especially the fixed cost, the variable cost, how it actually change. Please understand this so that you will not have challenges in performance management. High and low method. Now, class, using the high and low method to separate your fixed costs from your variable costs. What are the steps? Class, at NextGen Professional Associate, we have all steps to solve all the topics, right, in performance management. So once you understand that steps, that is what we use. That steps is very important. Once you understand these steps, just master the steps. You understand these steps? Yes, you are good. So please follow, right? Now, if you want to, there are steps to it, right? Number one steps is for you to identify the highest level of activity and the associated cost. What does that mean? The highest level of activities, it means your unit produced, the highest unit produced, right? Then the highest cost. When you identify the highest cost, you now identify the lowest, you've identified the highest level of activity, which is unit produced. Now you will now identify the lowest level of activity. If you identify the lowest level of activity, you will still now identify the lowest costs. Lowest, and that is why they say, and the associated cost. Now, you determine the variable cost per unit. Class, variable cost per unit. Now, anything that has to do with unit cost, let me come again. If the total numbers of students here paid, for instance, for the purpose of this class, let's say for instance, they pay for lecture. Let's say the lecture cost is 10,000. The total cost, that I think we have 55 participants. Let's say they paid total cost, they paid 50,000, right? Now when they pay 50,000, that 50,000 that they paid, if you want to get the units, how much did each of the students paid for the classes, it will be 50,000 divided by the number, which is 50,000 divided by 55. You have unit. That is what we call unit cost, class. That is what we call what? Unit cost. So the difference between in cost, you've identified the highest cost as the lowest cost. So the difference in the cost is this. You've identified the highest level of activity, which is output, the lowest level of activity, we give the difference in levels of activity. So when you divide these, you have your variable cost per unit. The next step is for you to determine the total fixed cost, class. When you want to determine the total fixed cost, it is calculated as Y. Excuse me. I've actually make it the subject of the formula, but that's fine. Let's move on to the next step. If you want to determine the total fixed cost, it is calculated as Y equals to A plus BS, right? Where A is the fixed cost, B is the variable cost per unit, X is the what? The level of activity. You can see that the level of activity depends on the what? On the variable cost per unit. You can see that the fixed cost is independent, stand on its own. Right? So the addition of these, we give the total cost. And this is also called, we give you the total what? The total cost. But this is the total cost is not total fixed cost. Don't worry. When we will use one example, we use one illustration to actually bring out the steps in high and low, right? So basically, this is the model we'll be working with. You can see this is what we call equation. You can see Y equals to A plus BX, where A is the fixed cost, B is the variable cost per unit, then the X is the level of activity. So we have the advantages. There's high and low with inflation. But quickly, before we move to the regression analysis, let's quickly take a question on high and low method, whether with inflation or without inflation. Class, if they say high and low with inflation, As a cost accountant or as a management accountant, you are predicting, you want to predict for the future cost. You should be able to, in predicting, if you want to predict for the future cost, you should be able to do what? Include inflation. You should be able to adjust inflation. One of the LinkedIn influential usually said that most Nigerians, or we are suffering from money illusion because we look at money in just ordinary term. We look at money in money term, not in real term. Imagine someone that is earning 50,000 naira as salary. For his or her own mind, I'm earning 50,000. I'm okay, I'm fine. But when you adjust for inflation, in money term is 50,000, but in real term, it is not 50,000. The person could be earning at the end maybe 49,000 or 45,000. But when the person collects the salary, he or she will say, oh, 50,000 naira, 200,000 naira makes sense. But in actual sense, in real term, that is not what the person earned. So when you are earning a salary, so now what takes us to money and real is because of the inflation. As a cost accountant, you should be able to look at it that, oh, this cost is 15 naira today. Tomorrow it may not be 15 naira, right? The question is, what is the inflation rate as of today? I think it's about 23.4%. If you look at what was recorded in the previous month, maybe it's about 24%, right? The decrease is about maybe 0 point something percent. So imagine you are earning 50K, for instance, or 200K. In money term, I'm earning more. My salary is 200K. Well, I'm a big boy, right? But when you look at in real term, that is not what actually the person earned, because you have to factor in what we call inflation. Just that your 200,000, just remove 2,000 naira from inside. That is when you will know that that money is not actually enough. So that is, I'm just trying to explain why we have to factor in inflation when you are doing your high and low. Don't forget, it is cost estimation. You want to estimate the future cost, the fixed cost, the future cost, the fixed cost, and the variable cost. You should be able to consider adjust for what? Adjust for inflation, right? Now, and that is what we'll be looking at: high and low method without inflation and high and low method with inflation. Now, in this regression analysis, I already have a pre-record video on regression analysis. We will not touch regression analysis. It's just for you to go and watch the video, right? I'll update it in the playlist. Just check the playlist immediately, maybe tomorrow. You can check the playlist, PM playlist, November 2025, right? You will see the video, right? Just check tomorrow. I will update the playlist. But our focus here for today is high and low method without inflation, as well as with inflation. Class, do you have anyone that have question before we look at this illustration here? Before we look at this illustration here, we look at illustration 4. Quickly, if you have question, quickly unmute your mic and just make use of the chat, or just raise up your hand, right? If you have question before we move ahead, please. So we'll look at illustration 4. Illustration 4. Please, if you have question, unmute your mic and ask a question. Are we still together?
Yes, sir. Yes, sir.
Yes, sir.
Okay, that's fine. Okay, that's fine. So, suggested solution. Let's quickly look at this illustration for high and low method without inflation. High and low method without inflation. The regression, regression analysis. I already have a pre-record video on it. You just go to the YouTube. I will update it tonight. Just go to the PM playlist, November 2025. November Diet 2025. Now, suggested solution. First, we have month. Oh, I'm supposed to include the name of the company. That's fine. But check. Always read the required. Your requirement is very important. Please, don't just, when you see a question, whether it is limiting factor, whether it is throughput, whether it is anything, the first thing you need to do is for you to read the requirement. Once you understand the requirement, it is assumed that you've solved 60% of the question. Right? Now, A, separate the repair cost into fixed and variable components using high and low method and linear regression method. So you can check the video on linear regression method. Our focus here is high and low method. We need to separate the fixed cost from the variable costs. Now, don't forget our steps. You can screenshot these steps while we move. You can screenshot these steps. And for those who have actually paid for the material, immediately after this class, I will update the folder. Right? I usually say something. I think last diet, you could see the pass rate, right? At Next Gen Professional Associates. It is not magic, right? I usually say that the value, the material, the price of the material, it is actually below the value. So I don't know what will take you for you to get yours. It's not actually compulsory. If you feel it is important to you, you get it. But if you feel it is not, we move from there. But all my questions will come from the material adopted from ACCA, ICANN Pathfinder, right? And so on, and some other relevant tests, right? And it might interest you to know that, okay, I won't say something. I wanted to say something, but I'll just maybe after this class, after the class. So now, and okay, let me quickly say this. Last diet, when we started activity-based costing, after marginal and absorption, after cost estimation, we moved to activity-based costing. I've not even checked the past question. The first question I solved was what was tested, was tested in November 2024. I think about maybe question 4 there. And I didn't even know. But during the course of my research work, I saw the question and I feel that this question is technical and I can technicality. I can want to test you, want to test your abilities, want to test your brain, right? So I decided to include it in my question bank. Guess what? When we started the question, someone told me that, oh, IB, this question was tested in November. I told the person that I don't even know, because during the course of my research work, as a tutor, you need to update yourself on diet, right? So that is it. So nobody knows what will come again. Now, suggested solution, separate the fixed cost. Don't forget this. The first thing you need to do is to calculate the variable cost per unit. Don't forget from our steps here, you could see that all what they want to calculate first is to determine the variable cost per unit. Now, if you want to determine the variable cost per unit, using that steps, the highest costs minus of illustration illustration 4, right? Illustration 4, variable cost per unit is equals to highest costs minus lowest cost divided by highest output or highest level of activity highest output or highest level of activity minus lowest output. If you see what we have in the steps, you will see that we have here the from the steps we have the highest level of activity. When you look for the highest level of activity, you look for the lowest level of activity. Activity could be unit produced, could be numbers of hours, could be kilometer, could be numbers of passengers, right? That is activity. So, and you could see that we have here the highest cost and the highest level of activity, and the highest cost and the lowest cost, sorry, and the lowest what? The lowest cost. So, from our question, VC, variable cost per unit, right? Please don't write VCO, write it in full. VC can mean what? Vice Chancellor, right? Variable cost per unit equals to, so from our question, illustration 4, what is the highest cost? You can see here, this is your costs. The highest cost is this. This is the quantity produced. This is your level of activity. This is the level of activity. Can you see? And this is your costs, the associated costs. Class, what is the highest cost here? Class, what is the highest cost?
15,000.
15,000. That's fine. 15,000
15,000.
minus the lowest cost. What is the lowest cost? What is the lowest cost?
7,500.
7,500 naira, please. 7,500 naira divided by
Divided by 9,000.
divided by the highest output. The highest output here is 9,000. Class, don't forget what we want to do. We want to separate the fixed cost from variable cost. If you want to separate the fixed cost from variable cost, you need to use high and low for you to separate that. And that is why what we are doing now, please. So if your level of activities is 9,000 units minus, what is the lowest output or the lowest level of activity? 3,000 units, not 3,000, please. It is 3,000 units, please. It is 3,000 units, please. Thank you. Now, if you look at this, 3,000 units, class. So what is the variable cost per unit? The variable cost per unit is equals to what? Variable cost?
1.25.
Not 1.25, Oga. Although, don't worry, you still get you. That's fine. That's fine. Yeah. So 1 point what? 1 naira. 1 point what?
1 naira.
1 naira. 1 naira.
1 naira 25 kobo
Per unit. Class. This is naira divided by the units. You have naira. You have 1 naira 25 naira per unit because you are dividing it by this. Now quickly. Now let me use something here. I'm coming. So what do you have? 15,000 minus 7.5. What do you have? You have here 9.5, right?
7.5.
7.5.
Naira divided by 9,000 divided by this. What do you have?
6,000 units.
6,000
units. Right?
6,000
So you
units.
can see that when you divide this, can you see? If you divide this now, class, if you divide this by 6,000 units, right? It is 1 naira. 1 naira 25 kobo per unit. Class. These are the little things that make some professional students to come back for PM, not because they don't know it. This is because they ignore some things, small things. Now, at the beginning, I'm supposed to include the name of the company, but because I forgot to include the name of the company, going forward, you will see that first thing you need to do is that, what is the name of the company? Then you start. All these things are very, very important. Class, if we have determined the variable cost per unit, the question says that separate fixed cost and variable cost components using the high and low method. This is fixed cost. This is variable cost per unit. Now, once you use this, from the steps, you can have y equals to a plus bx, where y equals to the total cost, a equals to the fixed cost. Don't forget that the question says we should look for the fixed cost and variable component and variable cost. The question did not say, the question says we should look for the fixed cost and variable costs. And when you look at this now, we've gotten the variable cost per unit. Now, what is now the fixed cost? Before if you want to get your fixed cost, you need to use this cost function. Y equals to a plus bs. A is equals to fixed cost, which is an independent variable. B equals to variable cost per unit. You can see that B depends on the level of activity. Can you see how close they are? Can you see it? So if the levels of activities increases, B will still remain constant, right? Now, X, level of output or level of activity. Activity could be unit produced, could be numbers of hours, could be numbers of passengers, kilometers, and all that, right? So for you to get your fixed cost, you need to use this function. We've already calculated the variable cost because the question says you should separate the fixed and variable costs. Now, you need to use this function for you to get your fixed cost. Now, if you want to use this function now, as y equals to this, now, you can use, you can decide that, we need to make A the subject of the formula. You can decide to use highest cost and highest output. If you want to use highest cost, you use highest output. If you want to use lowest costs, you use lowest output as well. Anyone? So in this case, now for us to make A the subject of the formula, class, if you want to make A the subject of the formula, we can say using highest costs and highest outputs. Now, class, what is the highest cost? The highest cost is what? 15,000. Is that not so? So 15,000 naira is equals to, class, is equals to A, because we want to make A the subject of the formula, plus B. Class, what is our B, which is the variable costs? Is that not so? Class, what we want to get, what we want to calculate is A. Now, let me bring this out here. A, B is equals to, what is our B, which is variable costs? B is equals to
25
variable
kobo.
cost. Okay, let me say B. Okay, open brackets, B. This is your B, right? So B is what? 1 naira, 25 kobo per unit, right? Now, you've choose the highest cost, A plus B, right? Now, if this is B, your X will be what?
9,000 units.
Highest output, which is 9,000 units. Your Y is highest cost of 15,000.
15,000 naira.
Then A, thank you, is unknown, right? A is unknown. Can you see? Your B is the variable cost per unit, right? X, because we are using the highest cost. If you use highest cost, you use highest output. If you use lowest cost, you use lowest output. Depends on what you want to use. You still arrive at the same answer. So B, 1.25 kobo per unit times the X. Can you see? X is what? 9,000 units. Can you see? 9,000 units times 9,000 units. Class, if you multiply that, what do you have? Equals to A plus, if you multiply 1.25, 1 naira 25 kobo per unit times 9,000 units, what do you have?
11,250 naira.
11,250. Class,
11,650.
11,650. Now, class, you see that, class, please pay attention. This is your variable cost per unit. And this is what? If this is variable cost per unit, class, and this is the level of activity, if you multiply your variable cost per unit times the level of activity, it will give you what we call total variable costs. So this figure here, 11,000.
11,250, sir. Sorry.
11,250, sir, please.
250.
250.
So 11,250 naira is your total variable cost. Class, pay attention. This is variable cost per unit, per one. And you are going to produce 9,000 units. What is the total variable cost? Will be 11,250. If these levels of activities increase to 10,000 units, you will see that your total variable cost will also change. Why? Your variable cost per unit will remain constant. If you change this to 20,000 units, the total variable cost will change. If you change this to 100,000 units, the total variable cost will change. That is to say, the total variable cost varies with the levels of activity. Your variable cost per unit will remain constant, irrespective of the levels of activities. Class. When you multiply these, you have total variable cost. So we can make subject of the formula A, therefore A is equals to 11,000, or we can have 15,000 minus 11,250 equals to A. Therefore, A equals to what? What is our A, which is our fixed cost? What is our A?
3,750 naira.
3,750. This 3,750, this is what we call fixed cost. This is what we call fixed cost. Professional colleagues, you can see that the question says that you should separate your variable cost from your fixed cost. Your variable cost per unit is this. Why? The total variable cost is this. Now, your fixed cost is this. You've separated them. Class. You've calculated your variable cost per unit as well as the total fee, as well as the fixed cost. We are done with that question. So you need to use high and low method to separate your fixed cost from your variable costs. Either high and low with inflation or high and low without inflation. Please, do we have anyone that have question? If you have question, quickly unmute your mic or just raise your hand, please. Are we good?
Hello, sir. Can you hear me, sir?
Yes.
Okay, so sir, you say with or without inflation, we can maintain the same method we just used to solve this problem.
Yes, we can, but something will change when it is inflation. You know, you need to adjust for the costs.
Okay.
Do you understand? You just need to adjust, but it's still the same pattern, but you need to adjust for the cost.
Okay.
You get?
Okay. Yeah.
Yes. Yeah, that's it.
But we can still maintain the high costs and high.
Yes, it's still the same. Like anyone that you want to, it's still the either you use lowest for you to get your fixed cost. You can use lowest cost and lowest output. Anyone, we still arrive at the same.
So you say if we use lowest cost and lowest output, we'll still get the same fixed cost, right?
Yes, you get the same.
All right. Thank you very much.
John, please off your video. Okay, Bukola, Ajayi, right?
Yes. Good afternoon, Mr. Ibrahim.
Good afternoon.
So I lost you at the point where when you said the 9,000 units. I wanted to be sure where you got the 9,000 units from.
Okay, where
the 9,000 units. You know, we said 9,000 units, 15 minus 7,005 divided by 9,000 units minus 3,000 units.
Okay. So what we did is just the highest costs. Can you see? I'm coming. Look at it here. Can you see highest costs minus lowest costs? Highest output minus lowest output. Now, look at the question. From the question now, what is the highest cost here? The highest cost is what? 15,000, right?
Yes, 15.
So what is the lowest cost?
Lowest cost
is
3,000.
3,000.
Yes.
Do you get? So you can see that. Sorry. Oh, sorry. I'm coming. Let me explain. Okay, highest output. Sorry. So if you look at it here, the highest output is 9,000.
Yes.
And the lowest output is what?
3,000. Okay.
So that is how we arrive at that 9,000 and
Okay.
3,000.
Thank you so much.
You're welcome. Any other question? Timothy.
Yeah, good evening, sir. Thank you for the class.
Yeah.
I just want to ask for a clarification. If you have a high and low with inflation, and if you have a step fixed cost, is it the same thing or there's a difference between the two?
No, there are two. No, it's still the same thing, but the cost will change. We will look at it. Right, we will look at that part of inflation now shortly. Quickly.
All right, thank you.
Yeah, okay. Any other question? Quickly, 2 minutes before we move to high and low without inflation. Then we'll close the chapter.
Yes, sir. So I just went to. Hello, I don't know if you can hear me, sir.
Yeah, I'm with you.
Okay, I just want to say that I noticed that if you add the total variable cost plus the fixed cost, it gives you exactly the 15,000, which is the what's it called? I don't know if you understand what I'm trying to.
If you add it, it will give you 15,000 naira. Have you done it? 3,750 plus 11,250. What do you have?
To be 15,000. I just wanted to point that out.
Yes, no, it will give you.
Okay, so
That is,
that
you use 15,000 naira to get. You use the 15,000 naira is part of what you use to arrive at 3,750. So definitely you are out this thing.
All right, sir. Thank you, sir.
Yeah, you're welcome. Okay, that's fine. So any other question, please? Okay. Let's quickly move. Rejoice.
Hey, good evening, sir. Thanks for the teaching class far. Okay, my confusion is with this highest level of activity and then the cost. I thought when you said you pick it with the associated cost, I was thinking once you take the highest level of activity, then the associated cost will be the one in line with that particular activity.
No, that is not what. No. That is not it, please.
Okay.
What it means is that look at it, highest level of activity. If you pick highest level of activity, you pick lowest level of activities. Can you see it?
Yes, sir. Yes, sir.
If you pick highest, you pick highest level of activities. The associated cost here is highest cost. No, not okay, I understand you, but it's highest cost. You pick highest cost, then highest level of activity. When you come to this place, you can see the difference in the cost. What are the difference in the cost? That is why they call it high and low method. High and low.
Okay. Yes, sir. Thank you.
You're welcome. So let's quickly move. High and low with inflation. Right. Let's quickly look at another illustration. Okay. Let's look at this illustration 2. Suggested solution. Please confirm if you can see my screen. Suggested solution. All right. Suggested solution. So please always write the name of the company. But for the purpose of this question, the name of the company was not actually stated, right? So just you are good to go, right? So this is illustration 2. Illustration 2. Right. Now, don't forget that the requirement is very important, please. Always try to read the requirement and understand what you want to do. It's very important. Now, I think calculate the total costs at 17,500 units and 20,000 units respectively. So we have to calculate total cost. We have to determine the total costs. I mean, okay. Now, if you want to determine the total cost, there's no how we would want to determine the total cost without bringing this function. Is it possible? It's not possible. We need this function because this is the total cost that they say we should calculate, total cost here. So definitely we need A, we need B for us to get the total what? The total. They say calculate the total cost at 17,500 units. That is, if the levels of activity here is 17,500, and if it is 20,000 units, if the levels of, if the X is, they've given us X already, but we need A, we need B, we need A and B. Class, we need A and B. First, calculate B first, which is variable cost per unit, highest cost minus lowest cost, right? So variable cost per unit, which is B, right? So I can copy this formula. I can copy this formula. Highest cost minus lowest cost. Variable cost per unit. Highest cost minus lowest cost divided by highest output minus lowest output. But before we calculate all these things, we need to look at other elements. Variable cost per unit, we can see that the levels of activities is given. The total costs, 140 and 170. Now, variable cost per unit is constant, of course, in this range of activity. And there is a step up of 5,000 naira in the total fixed costs. Class, there is a step up cost. The question is, what is step up cost? Don't forget, it's abnormal increase in fixed costs. When your cost increases, you'll be saying that, oh, because this particular rent, you are paying 20,000 naira. You are producing like 50,000 units there. But because of increase in the levels of activity, you need to expand. So there will be a step up cost, or it could be as a result of inflation. The rent you are paying 50,000 naira today, class, you are paying a rent of 50,000 naira. Tomorrow, there may be a step up cost of 5,000 naira in addition, or 10,000 naira. That is 60,000. So they're telling you that there is a step up cost in the total fixed cost when activity level exceeds 18,000 units. Now, once this activity level exceeds 18,000 units, there is a problem. There will be a step up cost. Class, am I communicating? Am I communicating?
Yes, yes.
Okay, so that's fine. So the question is saying that there will be a step up cost if your levels of activities increase from 17, exist 18, which means that anything from 17, let's say from 17, maybe you have 17 from 17 upward, right? You have to add a step up cost. There will be an additional cost to it. It could be as a result of inflation. It could be as a result of increase in the what is it called, level of activity, sales, right? So we need to add a step up fixed cost of what? 5,000 naira. Now, how do we go about it? Now, in this case now, so the variable cost per unit equals to this. Now, don't forget that when the levels of activity is 17, the cost is 140. Now, it has now, the levels of activity now move to 22. You can see that between 17 to 22, it has increased. It has actually exceeded the 18,000 from that 17. After that 17, there is 18, 19, 20. It has actually exceeded 17, which means that you need to factor in inflation of step-up cost of 5,000 naira in that particular cost class. Now, in this case now, what is the highest cost first? What is the highest cost? What is the highest cost?
170,000.
170,000 minus, what is the lowest cost? What is the
140,000.
140,000 140,000, right? Now, class, the law, who is that? The person she meets is our mic now. Okay, now there will be a step-up cost once your activity level exists 18,000 units. They are not telling you, which means that there is a movement from 18. If it exists that 18,000 units, bam, and 22,000, it has already exists 18,000. Is that not so? It has already exists 18,000, which means that they've already factored in the cost, inflation cost here already. It's already here already. Because why? Because they've added the inflation cost here because it has actually existed 18,000. That is why you have from 140 to 170. Definitely they've included inflation here. That makes it 170. But in this 140 class, they've not factored in inflation. You know, high and low is for you to predict for the future. Now, if at all, because of the levels of activities now range from 17,000 units to 22,000 units. So definitely from that 17, you need to factor in inflation for the future. Now, in this now, you already have 170,000. It has already been included here. So you don't need to adjust the 170,000 because inflation has already taken place. You've added it. But in this part, you are predicting for the future. Now, 17,000 units, right? Now, when it actually exists, right, there will be a step-up cost. So you need to adjust for this 140,000. So in this case now, you had 5,000 naira to this, 5,000 naira, right? So that when the production, you know, you are predicting for the future, so that when the levels of activity exist 17, you know that, okay, there is an inflation has been, you have to factor in, you are predicting for the future. Don't forget, cost estimation. You are using the historical data to predict for the future. Is that also? So there is a probability that because you have 17,022, you already know that this thing will exist 18,000 because you have 17 and 22. So in that your 17, that your historical cost of 140 adjust for inflation for the future. Class, am I communicating? Now, if we have this, highest output, what is the highest output? 22,000 units.
22,000.
Minus lowest, 17,000 units.
17,000.
So B, which is variable cost per unit. So what do you have? 170 minus 140, 500. What do you have?
$25,000.
Divided by the levels of 25,000, 25 naira per unit, right? You've divided it, right?
No.
Hello?
No, divided by 5. That is 5,000 per unit. 5,000.
You give us 5,000 naira per unit. So
Okay, 5,000 naira per unit. Please, others should confirm.
Yes, sir.
Please,
Yes, it's correct. 5,000 naira per unit.
5,000 naira per unit. That is the variable cost per unit, class. All right. Now, the next thing is for you to get your fixed cost. Don't forget that this is your A and this is B. We've calculated B, remain A, right? Don't forget, you need to get B and A first before you will get your what? Your total costs. You need to get your A and what? You need to get your A and what? A and B. So the next is to say y equals to A plus bx. So we can still use either you use highest cost, right? Because we want to get A now, which is the fixed cost. Either you use highest cost and highest output, or you use lowest cost and lowest output. Anyone. So highest cost and highest output using highest cost and highest output. Right? So y equals to, what is the highest cost here? What is the highest cost? 170, right? What is the highest cost?
170,000.
170,000 naira.
170,000. Right? A is unknown. We're looking for A. B is 5,000 naira per unit. If this is correct, if this 5,000, okay,
It's 5 naira per unit.
so I don't know how they arrive at 5,000. Oh, 5 naira per unit. Then X. Don't forget you are using highest cost. Hello, what is this now? Ajayi, are you still with us? Okay.
Yes, I'm still with you.
Okay, now I need your help here. Please. Thank you. Just hold on. Just hold on. I need 170 minus, or please minus 170 minus 170 minus 145,000. What do you know?
5 naira is correct, sir.
25,000.
We give you 25,000.
I don't know if we have to go back to this thing.
It's correct. I eliminated
Sir, the 5 naira
three
is
zeros.
correct. It's correct.
So let's quickly move. We have here, we are using the highest cost, right?
Yes, sir.
Now we need to use the highest output as well, which is 22,000 units. Right? So in this case, we can make A the subject of the formula. So 170,000 units, 170,000 naira equals to A is unknown plus B, which is 5 naira per unit, times 22,000 units. So Ajayi, what do we have here? Equals to A 5
was
times 22,000 units. What do you have?
110,000 naira.
110. So
110.
this is your total variable cost, right?
Yes, sir.
And don't forget that if these levels of, we've not answered the question. We've not answered the question. The question says calculate the total cost. But for us to calculate this total cost, we need to get A, we need to get B. Now, this is the total variable cost. Can you see? And if you actually increase this 22,000 units, maybe if you increase it to 50,000 units, you will see that your total variable cost will change, right? It varies with the levels of output. The variable cost per unit will always remain constant. So now we can make this subject of the formula 170 minus 1110 equals to A. Therefore, A equals to, Ajayi, what do we have? What is our fixed cost?
60,000 naira.
60,000 naira. Thank you. All right, that is the fixed cost. That is the fixed cost. Can you see? This is the fixed cost. So you can see that we can now go back to the question. You already have your from our cost function. You already have variable cost per unit, which is your B. You already have A to be 60,000. So therefore, we can now say calculate the total cost, which means that the level X here will be the levels of activity. What is the total cost when the levels of activity is 17,500 and when it is 20,000 units? So I can bring out the formula, right? I can bring out this formula here, the cost function, right? Bring the formula here as cost function at how many units first? At 17,500 units, 17,500 units. What will be the total cost? You already know that your A is equals to 60,000, right? If A is equals to 60,000, B is your variable cost per unit, which is what? 5 naira per unit. Then the X is 17,000 units, 17,500 units given to us because we want to determine the total cost. Then Y is unknown. Y is what? Y is actually unknown. So therefore, what will be our total cost here on our function? So our total cost will be Y equals to A, 60,000, 60,000, right? Plus B is 5 naira per unit times X, which is what? 17,500 units. So what is the total cost? Class, what is the total cost? Y equals to what?
147,500.
147,500. This is the total cost. This is the total cost, right? So the next is at 20,000 units. So you can do that one at 20,000 units, right? So you still bring in the variables at 20,000 units. What is the total cost? So you bring all these variables. Yeah, you can complete this, right?
Wow,
Just complete it.
160,000. Yes.
Thank you. Just complete
Yes,
it.
sir.
Y Okay, so you can complete this, right? So thank you so much. So if you have question from here, I know you have question, right? So you can quickly, okay, let me start from Timothy. Timothy, quickly, please.
Yeah, I don't have any questions. It's clear now.
Okay, that's fine. That's fine. Because of our time, Deborah, quickly.
Sorry, sir. Please, can you explain that first part where you added the 5,000 naira to the 140,000 that we have?
I'll explain, oh, Deborah. Were you in class when we start?
Yes, I was in class, but I missed that part because I went to pick up something. Sorry about that, sir.
That's fine. So what we did here was that the question says that variable cost will remain constant and there will be a step-up cost. I've explained step-up cost.
Yeah.
Up cost may arise as a result of inflation. It may arise as a result of increase in the level of activity. That additional cost you incur, it is what we call step-up cost. And the question says in the total fixed cost, when activity level exists 18,000, when the activity level exists 18,000 units, Deborah, you want to estimate for future costs. If you want to estimate for future costs, you need to consider inflation. If you want to estimate for future costs, you need to use the historical data to predict what will happen in the future. Now, the question says calculate the total cost. You cannot calculate total cost of 17,500 capacity or unit and 20,000 capacity or unit without calculating your variable cost as well as fixed cost. Now, for you to get that, this 170 has already include inflation. You cannot adjust this. Now, the only thing we can adjust here is that this is now historical data. If it exists 18,000, and you could see from the levels of activities that already exist 18,000, which means that we want to know what will be the future cost, what will be the variable cost, okay, per unit. Okay, we have to adjust for inflation in the future, right? That is why we have to add additional 5,000 naira to this. Do you get? That's why we have to add additional, because we are predicting that the cost will increase in the future. And looking at this table now, you see that it has already increased because you have 17 and you have 22. Do you understand? And that is why I added in another case scenario. No, don't let me go there, but you still get the same answer though. In another case scenario, that will be in another time. Do you understand now?
Yes, sir. Thank you, sir.
Thank you. So I think we have to go because of our time.
Okay, sorry, sir. Sir, quickly. Hello, sir.
Go ahead, please.
Okay, so sir, the first question we solved was that without inflation.
There is no, yes, it's without inflation. You can see that I even from the illustration I include that there is a step-up cost. Once you see step-up cost, there is a definitely it could be as a result of inflation. It could be as a result of maybe increase in the level of activity.
Okay, thank you, sir. Just to be sure of what's just gotten. All right, thank you, sir.
You're welcome. Esther, are you still in this class?
Yes, I'm in class.
Okay. Alpha, are we good?
Yes, we're good.
Thank you. Oluwafemi.
Yes, sir. Thank you, sir.
Okay.
The question I wanted to ask you was about because the question state that the question state that anything exceed, as in the activity level that exceed 18,000 units. That's why I'm confused, sir. Because they now said we should calculate for 17,500 units. I think that one, I'm thinking from my own end that that one has not exceeded that 18,000 units, and I think we are not going to inflate that one because it has not exceeded the 18,000 units, and 20,000 already exceed the 18,000. That's what I want to just check over. Thank you, sir.
Interesting. I love that. You see, that is why that you say you are thinking. That's fine. You are just thinking. Now, do you know that this 170,000 naira has already include inflation cost? Do you know? Do you know? From 140 to 170 now. Do you know? What make the cost to increase? What make it to increase? The factor in inflation, so you don't need to adjust that again. You are adjusting 170, it means that you are like double counting. You're adding additional 5,000 naira to it after it has already been adjusted for. The only thing that is actually yet to be adjusted is the 140,000, because you want to predict that, okay, if they have this, what will be the step? What will be the additional cost? And you see from 17, 18, 19, 20 to 2020 to 22. Now, let me help you. What you would have suggest is that, oh, we're supposed to minus 170 minus 5,000 naira. See, class, if you do 170 minus 5,000 naira, right? Use high and low method, you will still arrive at the same. I don't just want to go to that part, right? But I just want you to understand the logic behind it, that you as a professional, as a cost accountant, as a management accountant, you are looking at in future that, okay, if this thing exists, this 18,000, if it exists this, so okay, what will be the additional cost? What will be the step up cost? And that is it, right? That is the basis, right? And you look at it that, okay, we have 140 now. If it exists, then definitely we have an additional 5,000. So we add it to it that, okay, it may increase as a result of what? Inflation. Don't forget, cost estimation. You are using an historical data to predict the future. Historical. If you consider 140 as historical, then you are now looking at the future. Oluwafemi, are we still together?
Yes, sir. But what I'm trying to say was that that 17,000 naira, when we try to check the high and low for that 17,000, we're going to get 175,000 naira. If you check the the high and low for this 17,000 units. If you check the high and low for the 17,000 units, you're going to get 145,000 naira at a total cost for it. But I'm trying to say the 18,000 once, but if you try the 20,000, you are going to get that 170 as the actual total cost for it. But I'm not saying that 17,500 units. I think that one will have, if you use the high and low for that 7,500 units, I think that one will be exceed as well, because the question said when activity level exceed 18,000 units, that's when we can now.
Hello. Hello. Hello, Afemi. That's fine. Rejoice, quickly. I think the time is fast spent. We need to go. Rejoice.
Okay, and mine is just a clarification. Sir, it's just a clarification. Will you drop this recorded class at the end of this class, like on the platform?
Yes, it's live already. Just check, go to NextGen, check live, you see it there. So you check PM playlist.
Okay.
So it will be in PM playlist. Just check PM playlist. Anyone should be there.
Okay. Thank you.
You're welcome. So quickly, time is fast spent, right? So we need to go because of our time, right? Oluwafemi, that's fine. You get that's fine. Akikomi, right? I think Akikomi. Quickly.
Thank you, sir. I've gotten what I wanted to ask. That 5 naira per unit. That's the question I wanted to ask, but I've gotten it, because what you did there is 170 minus 145 divided by 5,000 units.
Okay, that's fine. That's fine. No, that's fine. So Oluwafemi, right? So I think you should just go and check it. Maybe you watch the recording again. then you see what I'm actually trying to explain in this part. Don't forget, I always believe in understanding. I always believe in what takes us to this particular part, and it is high and low cost estimation with inflation. So on this note, thank you so much, everyone. We'll meet. I think Malga will come tomorrow. We take performance management, another topic. We take another part of performance management, right? Why I will continue with my own part as well. So thank you so much, everyone, for joining. And
Thank you very much, sir.
thank you. I hope you have a wonderful week. Thank you.
Thank you so much. Thank you.
Thank you. Thank you.
Thank you
Thank you. God bless you.